Hi, this is Tony Sagami. Hey, this week I want to talk to you about, a little bit about the U.S. dollar. It got a little bit of media attention last week when China announced that it bought $5 billion worth of U.S. Treasury bonds in the month of May. That's on top of the $18 billion that it had bought in the month of April. And that brings China's total holdings of U.S. Treasury bonds to $900 billion, almost $1 trillion. Now, some of the Wall Street crowd is telling you that that's a good sign that the bond market's healthy, and this is a great time to buy bonds. And I say, not a chance, and here's why. Up until April, China had been a net seller of U.S. bonds for 6 months. Even the China's premier had made some very public and damning comments about the ability of the U.S. dollar to repay our debts because of our massive spending. And that was even before the Obama administration went on their wild money spending spree for health care, TARP bailouts, and everything else. And now, this last week, we heard they want to spend another $140 billion to extend unemployment benefits. So really, the reason that China bought more bonds wasn't because they're enthusiastic about the dollar. It was because of the problems over in Europe with the Greece debt crisis that now is starting to spread out over the rest of Europe. And so China's reason to buy bonds was more of a default or being praised by faint dams. Uh, you know, the dollar was not China's first choice to take to the prom. By the way, and if you take a look at this chart that's out there, Japan is the #2 holder of treasuries with $795 billion. And if you take a look at emerging Asian countries, between China, Japan, and the rest of Asia, you're looking at a huge owner of our debt. And ownership usually means some influence and control. And I think it's also interesting to look at OPEC has been a net seller of U.S. dollars for quite a while, for about 5 years, 6 years. But the point is, the dollar has had a little rally lately, and some people think that's a good thing. But I'm telling you, it's short-lived, very short-lived. You can't go on spending the money we have and see the dollar continue to show that type of strength. The long-term, the direction of the dollar is much, much lower. If you wanted to make some money from that weakness in the dollar, there's a couple ways to do that. One, you could take a look at the Power Shares U.S. Dollar Bearish ETF. That's the Power Shares U.S. Dollar Bearish ETF. The ticker symbol on that is UDN. UDN. And that's a direct bet on the dollar continuing to fall. On the other hand, if you wanted to take a look at some currencies that should strengthen in the future, I think the #1 currency to take a look at is the Chinese yuan. And there's also an ETF that would benefit from that. That's called the Wisdom Tree China Yuan ETF. The ticker on that is CYB. CYB. And so whether you want to bet against the dollar or bet for something else, I think the smart move going forward is to expect the dollar to go down and position yourself accordingly. Until next week, this is Tony Sagami signing off.